The Zambian Watch.
Welcome to the Zambian Watch, a channel dedicated to bringing you the latest information on research, new developments and current events from Zambia and largely around the world. Our team of experts is always on the lookout for the most interesting and groundbreaking news in the field of science, technology, medicine, and more. Our goal is to keep you informed and up to date on the latest developments in your field of interest. Zambian Watch has something for you. So why not subscribe to Zambian Watch today and join the millions of people who trust us to bring them the latest news and information from around the world. Hello everyone, welcome to yet another episode of the Zambian Watch. Today we're going to discuss a change in issuance method of government bonds according to a statement that was released by the Bank of Zambia on the 60th of December 2023. So the statement reads, "The Bank of Zambia wishes to inform the general public and investors in government securities that effective from January 2024, the government bonds will be issued at par in the primary market for all new issuances. This means that government bonds will be sold at their face value, that is, the cash amount to be invested will be the same as the face value amount. Issuance at par entails that the coupon rate for each instrument will be determined during the auction. We further wish to advise that the coupon rate for each instrument on auction will be the respective highest accepted yield rate. Reissuances of any existing bonds and secondary trading of any bonds may be done at discount, par, or premium depending on market conditions. The change has been made to streamline government debt metrics and debt service in general." So in order to just understand this public notice, we need to define a couple of key terms. The key terms are the face value and the coupon rate. These are essential in understanding how these bonds are issued and what the statement generally means. So the first key term is the face value. So the face value just represents the amount that the bond issuer agrees to repay to the bondholder at the bond's maturity date. So in this case, the bond issuer is the government because the government is the one that issues out these government bonds through the Bank of Zambia. And then the bondholder is the investor in these bonds. Given an example of a 5-year bond, if a 5-year bond has got a face value of 10,000 kwacha, it means that what the investor gets at maturity of that 5-year bond is a 10,000 kwacha. The coupon, on the other hand, represents the amount of regular interest income that a bondholder receives through periodic coupon payments, typically paid semi-annually. So government bonds have a coupon payment, which is a payment which is made to a bondholder once every 6 months for the duration of that bond. So an example of a 2-year government bond means that the investor gets 4 coupon payments because there are 4 6-month periods in a 2-year span. So there are 3 ways in which bonds are issued in the global market. So there's a discount bond, there's a par bond, and a premium bond. So we'll just discuss in brief what these 3 ways of issuing bonds are. So the first is a discount bond. So a discount bond is a bond that is issued and traded in the market at a price below its face value. So an example would be a bond which has a price or an investment amount of 10,000 kwacha. So at the point of investing, the investor pays 10,000 kwacha, and then at maturity of that bond, they get back 20,000 kwacha. So that is a discount bond. Then the next type of bond is a par bond, which is a bond that is issued and traded in the market at a price equal to its face value. So for a bond which has a cost of 10,000 kwacha, at maturity of that bond, the investor gets back their 10,000 kwacha. So that's the bond that is offered at par. So the par means the price is equal to the face value. Then a premium bond is a bond that is issued and traded in the market at a price above its face value. So the price or the cost of the investment would be 10,000 kwacha, but the face value, which is the amount they get at maturity, is 5,000 kwacha. But the focus of our discussion today is between the discount and the par bond, because government bonds are transitioning from being offered at a discount to being offered at par. So for an investment amount of 500,000 kwacha in the tenure of 5 years, we're going to compare how these 2 bonds differ in terms of how the yields are paid out and the coupons. So we use an example of the most recent bond auction, which was the auction at held on the 24th of November 2023. So a 5-year bond had a yield rate of 22.5% and a coupon rate of 11%. So using these parameters, a discount bond with an investment amount of 500,000 kwacha for 5 years will have a face value of 750,000 kwacha. So this means that at the end of the 5 years, after investing 500,000 kwacha, this investor gets back 750,000 kwacha. In addition to that, they also get coupon payments once every 6 months for 5 years of 41,250 kwacha. In just calculating the total return from this investment, which is the 10 coupon payments plus the yield, which is the difference between the face value and the investment amount, the total return for this investment is 662,500 kwacha. And then when you go to a par bond using the same parameters but just having the coupon rate being equal to the yield rate, the par bond with an investment amount of 500,000 kwacha will have a face value of 500,000 kwacha, because by definition we say that the price of the bond is equal to the face value. So the gross coupon payment will be 56,250,000. So this means that once every 6 months for the duration of the bond, that is for 5 years, this investor will be getting 56,250 kwacha. And then the total return, which is just the 10 coupon payments that the investor gets once every 6 months during the lifetime of that bond, is 562,500 kwacha. So just comparing these two types of bonds side by side using the same amount, we can see that a discount bond has got a relatively lower coupon payment in comparison to a par bond. But a discount bond has got a significantly higher total return in comparison to a par bond. So those are the major differences between the two. So the government of Zambia has changed the way they issue bonds from offering them at a discount to offering them at par. So the question that comes to mind is, what is the rationale behind these changes? So there are two major reasons that a par bond has, the two major advantages that a par bond has. So the first is that it has higher coupon payments. So we could see from that example that a par bond had a significantly higher coupon payment. So this in turn just empowers the investor to have better investment power in comparison to when a bond is offered at a discount. Then the second reason is lower debt accumulation. So in principle, government just issues out these securities for purposes of access to liquidity. So the government needs to provide public goods and services, they need to service debts and pay civil servants and so on. So it's less to do with the government making investments. They don't get that money to make investments, but instead they just use that money for liquidity purposes. So as such, offering government bonds at par means that the accumulation of domestic debt is significantly lowered. So this is just from the perspective of the issuer. So in essence, in summary, offering bonds at par for government liquidity management prioritizes accessibility, stability, transparency, and cost-effective borrowing. This strategy supports the government's broader fiscal and policy objectives while ensuring a steady influx of funds from a diverse investor base. So it just comes down to you as an investor. What is it that you want? So with all that has been shared, we as Zambian Watch have done our fair share of just helping potential investors in government securities understand what that change means going forward starting January 2024. We just ask you to subscribe to our channel, leave a like, and hopefully we'll grow as a channel. Until next time, bye-bye.